Hello traders, it's 8:01 a.m. Chicago time. I'm coming at you from the in-laws study in Toledo, Ohio. Hopefully the transmission works properly and the internet can handle it. We're sheltering in here with the in-laws to get help for my 2-year-old. So if there are intermittent drops of frames or sound or something, just let me know in the live chat. Thanks for joining me today. This is episode number 1718. I want to remind everybody that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. What a session overnight. The market is in risk-on mode after being limit down on the 5% Globex limit in the ES. The limit down was kind of bounced off of quite a bit. The limits were posted. On my Twitter feed, and if you're a Convergent member, they're in the Head Trader channel. The limit down was 2174. Limit up is 2404. We got to 2386 once the Fed announced that it is intervening even further through extensive new measures to support the economy. We'll do open-ended Treasury MBS buying an amount needed. In other words, there is no cap on how much money they're willing to put on their books. The market responded with basically a 212 point swing, essentially. Very, very large ranges in volatility, but in either case, it's risk on. I'm seeing the markets up across the board in safety as well as in risk assets. The Russell leading the pack up 4.5%. The Russell has taken an absolute beating. Still trading at 1,062, up 46.4 or 4.57%. Crude oil popping a little bit higher, trading at 23.45, up 82 cents from Friday's settlement, or 3.4%. Crude's trading May. The E-mini Nasdaq's up 213 points, or 3%. Gold is up today, $39. It's above the 1,500 mark. Again, up 2.69%. The S&P is up 60 points, or 2.6% from settlement. The Dow is up 459 points, or 2.4%. Interestingly, the Treasury notes are also up 29 ticks, and big ticks, and the bonds are up but still weak, only 20 ticks up on the futures. The dollar index is trading at 102.61 cents, down 89 cents. It's the only one that's down. So definitely a risk-on type of market. The market has pulled back a little bit here, about 36 points in the S&P, and that's where we stand coming in. In terms of what has caused the limit down, several things, multiple countries and economies putting in even stricter measures on their on the movement of people and the businesses. Several states put in a shelter-in-place order, meaning basically only essential businesses and personnel will be allowed to move around. This can be enforced by law, forcing people to stay home. Also, the Senate failed to advance the coronavirus stimulus package. On top of that, ECP's de Guindos said that the coronavirus will put the EU into a recession. There are several reports that the recession resulting from this action from the coronavirus is likely to be at or slightly greater than the Great Recession that we saw in 2008, 2009. So that's got the market in jitters. And so on and so forth. More and more businesses are shutting down, and the market's expecting it to last a while. Now, there's been talk of shelter in place or lockdowns, not only in entire countries and states and so on, but nobody's talking about when this shelter in place would come to an end. And I think from what I've been reading, and man, I'm following this very, very closely as it impacts all of us, it's likely to take longer. It's going to take longer, and the recovery is likely to be slower than we would expect. The fact that they have these shelter-in-place orders for 2 weeks doesn't do anything to reduce the almost vertical slope of new cases being counted, and that's not even with all the testing in place. I mean, we don't have a testing system in the United States, at least as the Koreans did, South Koreans did. So we don't really know how many cases there are out there. So that line is expected to climb. And unfortunately, POTUS, being who he is more concerned about the numbers, quote unquote, increasing than actually getting people tested and quarantined as necessary to curb this response. I think he's coming around a little bit, but anyway, won't get too much into that, but leadership being what it is, we move along and pay attention to what the market is doing. So the high overnight in the ES, I'll go over that in a minute, coincides with several things. But in terms of what's on the calendar, what's scheduled, and remember, this is still a very, very heavy news-based environment. I mean, the news has been just key over the last 2 years. In fact, since 2016, the election of 2016, it's all been news-based. Trade wars, nuclear testing from North Korea, the confrontation with Iran, and the trade war with China, with Canada, with Mexico, with Europe, and so on and so forth. There's nothing really critical today that is on schedule. There's a couple of auctions, 6 and 3 month bill. These are typical, but there's not much going on other than that's scheduled, but there's a lot on the news feed. The coronavirus bill in Great Britain, more lockdowns expected across the United States, which will further impact manufacturing and production, and so on and so forth. That's what we know about, and there's just a ton that we don't. So this is where we stand at the moment. Let me switch gears here real quick and look at what I wrote on, what I came up with on or covered on Friday. The primary expectation is an open auction that drops into the 2347, 2350 area, which was I believed was significant this morning, but it blew right through on that Fed news. And then I was looking for it to turn up. That did not occur. What did occur is the push up up to 2450 for a rotation down, and as I pointed out, the downside target is 2280. 2280 for me. That was the plan. A push up to 2450, a rotation down, and a push down to 2280. Let's look at what has happened. Here's what the market did. It opened up. It pushed lower, and then it pushed up to 2442. Remember, 2450 was expected, and then it rotates down to 39, pushing through that 2350, 2345 area, basically by half a rotation, pulls back to the mid, and then the low of day is 2280 on the nose. It holds the composite high volume node at 2280, which I mentioned also on Wednesday as a potential test and turn area. It held it to the tick on Friday. I want to remind everybody that the current rotations, instead of 3.5, 4 points per rotation on a 1 minute bar, the current rotation is clocking in at 24 points, 24.6 times the norm. So stopping at 2280 on the nose is pure luck, really, because it could have pushed through to the high 60s and still would have been valid as a key test of this area. So again, this was what was expected, a push up to 2450, up till 2450, and a rotation down into 2280. Here's what actually happened: a push up to 2442.50 and a push down to 2280 on the nose. Again, that's pretty lucky, but we're not here to call out the exact levels. That's just a pointless game that many play, I guess. The point is to read the narrative and see what the market's intent is and align with that intent. That's our job. So that's where that stands. We finished Friday on a neutral extreme down. Neutral extreme down. We took out the initial balance high right here. So we had a range extension up, and it looked like scenario 1 was in play and is likely to continue to squeeze higher into the 2475 and then 2500 area. And then the market rolled over a reversal and a strong directional move in the ensuing sessions. And so here it is, pulling back to the mid, and then we finished on a neutral extreme down. So the expectation, once Friday closed, the expectation is the market is likely to explore lower. That's how that information is useful. The market is likely to push lower and continue down into and below the 2200 area, and that's what we ended up with overnight. We went to 2174 before the market was locked down. So that's where that stands. One thing to note: Friday was quad witching, and we cannot pay attention or give too much credence or weight to the volume delta, and but Friday really had a lot of quite a high positive delta number. This is very unusual. Again, quad witching, the volatility is just not, the volatility is causing the liquidity to be thin, and so price exploration versus volume are not really in sync a lot. You could see the day before we opened up here, test down, and we finished relatively higher, but the delta was pretty much flat that session. But Friday was very, very curious in that there was lifting on the way down all the way through, and that may be just just positioning into the next contract still. But I found that pretty odd as the market was selling off. I could see in the book, and I could also see in the delta, as you can read here, that the small lots, in fact, I'll show you the delta on Friday. The top pane right here, that's the S&P minis. The orange is the small lots. These are 9 lots or less. The white is 10 lots to 99 lots. These are consolidated tape lots. These are rebuilt orders or rebuilt fills. And then the yellow is 100 contracts or greater. And you could see small lots were kind of dominating and pushing the narrative, which doesn't really surprise me because the liquidity just isn't there. So it looks like everything is being traded by through small lots. But overall, the delta was relatively strong on the way down. So that's where we stand at the moment. Once we were done with Friday's session, coming into the overnight, we open up as we do bounce off of the limit. We keep hitting it, again and again. It hit the limit down number in like 3 minutes, but we keep bouncing off of the limit down and pushing higher highs as we start to move up, and then the Fed announcement right here pushes us all the way to Friday's point of control to the tick. By 4 ticks in a highly volatile environment. And so what we have is a bull flag type of situation here. We've gone back into the prior day's range. So the question is going to be this morning whether or not participants are going to step in and hold Friday's range and hold this 2280 area, key area, for a short squeeze, or if they give it up and start moving back towards the 2239 and then below the 2230, 23, and so on, and start coming back to where a lot of last night's trading is. The volume overnight is not really reflective of the participation because the offers were shut off due to the limit down situation. So even with that, the volume is quite high, and there's quite a bit of participation here. So that's where we stand. We're below Friday's IB, above Friday's close. So we're positive on the day. The mid of the session is 2280, but it's all artificial because of the limit down situation. So it kind of throws a wrench in things when we're limit down because the market's not allowed to express itself freely, right? So here's a CT Bookmap. Again, you can get this at ctbookmap.pro. Right here, we immediately drop. Limit down is right there. That purple line is the point of control, and it's also limit down for the session. And we could see that right away we have this liquidity that's been sitting there and has been steady. A lot of this liquidity traded through at 2290, 2300, 2250. These are all major strike prices. 2230. They're all major strike prices, and since then, so if I zoom in a little bit, you can see there's quite a bit of delta lifting there, pretty strong lifting on the way up, and the market has got 2360 again, 2370, 2380. These are all big strike prices offered with very little below. We could see 2300 coming in, but the fact that it's coming, just not much there at all. And then we move into the overnight profile, and it's likely to retest that overnight low if we start to fall through. Okay, so we want to see this morning whether or not it holds the 2280 area right in here. Does it hold this area? And so it starts to explore, it continues to technically explore back into the prior day's range up to 2345.50, and then from there is the shorts into tomorrow and the day after. The market really is waiting for good news. The market's in a panic selling situation because there is so much to price in. There's so much to price in here because this is unprecedented. We've never had a pandemic like this strike the world in its entirety. We've had SARS, we've had Ebola, H1N1, all these, but there are localized infections. This particular virus is taking over every economy, and it's forcing, despite all attempts, it is done to the downside. And it's likely to overshoot the state of the economy. I think the damage is quite high, but it's not likely to turn early. The confidence in that rally is gone. We are way off the all-time high at this point. Though, as we've seen, gold, it doesn't matter. People are going to move their money into cash as they don't know what the future holds in terms of employment and so on and so forth. So we'll see. I mean, the officials are finally doing what's required or what's needed to support this thing, with Mnuchin negotiating with the Senate leaders and so on for the next package. But politicians need to step aside and actually do something for the greater good at this point. And I believe this is going to bring them together to be able to do that. It'll be nice to see finally. So that's where we stand in terms of what's expected for today. It's hard to say with a limit down situation. I was able to draw to trade normally, and so come on, dude. 1 second. It appeared to trade normally, and so it was a lot easier to be able to create a plan for Friday. Today, the expectation is this. I'm expecting the market to open, test up potentially into the 45 area, 40 to 45 area, consolidate, and I'm looking for it to push into 2280, pause, and then start to move lower, 2251, and move to the other side of this low volume node to at least 2200 this morning. I'm expecting the market to take back, as we've seen, every opportunity where the market has pushed up has been sold, because it is definitely weak at the moment. The secondary is an open auction that opens, that drops us immediately back towards the SOC, or the scene of the crime, which actually is the SOC for this is, I'll tell you what it is. It's 2214 and a quarter. 2214 and a quarter is around the SOC. Likely to move to that area, consolidate, and then we might see a bounce up for a push above. And if we do, then again, I'm looking at 45 as a key test area. Above there, 86. The overnight range is very, very wide, so who knows what the overnight stat holds. Historically, it's at 98% probability of touch of overnight high at 2386 or low at 2174. But these are very, very wide ranges. So that's how things are looking. Again, the key areas below 2214, and then below there around 2200 is where I'm looking to the downside. The upside, I'm looking at 2240 to 2245, and then beyond there 65, beyond there 86, beyond there 2400. 2400 is a big figure here. Let me write this out. 2400 is the most traded price since the drop. It is the MC point of control. 2400 represents several confluences, and that's a big, big magnet above if we decide to push above. Okay, I'll leave you with that. Good luck, and I'll catch you tomorrow morning. Take care.